and welcome out to our halftime report here on a Friday, 9/28, 2018. Wake me up when September ends, Matt. That looks like the end of the month here. Last trading day, I believe, for September, closing out the quarter.
Closing out the quarter.
How you doing today, brother?
I'm doing better than Elon.
Oh, God. We'll get into Tesla, I'm sure.
Oh, poor Elon today. Poor fanboys today. I canceled my membership when he sent the funding secured text. That's when I canceled my Elon Musk fanboy membership club.
Yeah.
We'll get into Tesla. Elon, it's just going to be a painful next few days for Elon Musk.
Well, for those of you who don't know, Elon Musk was actually formally charged by the SEC with fraudulent kind of behavior as the CEO of a publicly traded company. That can be a difficult charge to handle. Obviously, we're going to dig into the chart here.
I said it on Twitter a month and a half ago when this happened. Only Jamie Dimon or the Fed gets away with this type of stuff. Elon, you're not Jamie.
Oh, he's not as handsome as Jamie either. Jamie is definitely
Jamie's charismatic, man.
He is a charismatic dude.
Say what you will about Jamie Dimon, and I've said quite a bit about Jamie in my life, but I will tell you one thing. The people that work for Jamie Dimon love him. Just absolutely love him. JP Morgan employees love him. He treats his employees as right. So say what you will about Jamie. He is a stock manipulator and a criminal, but he can get away with it. It's legal criminality.
Legal criminality, huh?
Yes.
Well, the stock's actually sitting on support now. If you're ever looking for an opportunity to buy JP Morgan, you probably could do that, or Morgan Stanley, either one of them.
I'd rather punch myself in the face, but yeah.
You do not go long Wall Street banks, do you?
I never do. No,
it is not on your watch list.
It's against my moral code, right? I won't even go long XLF, Tim. It's just against my moral code.
Yeah. Well, let's break down the market here today. Obviously, on a Friday, I want to take a look at the economic calendar for the week and recap. There were some economic indicators that came out today. Also, look at the charts. Obviously, we're in a nice bullish uptrend here on the S&P 500. Matt, over the net of the week, I would say we are relatively flat.
Right.
Red candle, candle, green, but nothing really in terms of volatility.
It's going to end the week red, in my opinion. I mean, you might see you're having really good intraday action here on all of the indexes. To be perfectly honest with you, it tested down earlier today, given the negative news that came out of Italy and the European Union. Italy's debt problem, we've known it for years and years and years, but it's getting worse in that European. And for those of you who are not very familiar with the European debt crisis, this is what we reference to the pigs. Portugal, Italy, Spain, Greece. And Greece was kind of the big headline there for years and years and years. But I think what most people felt like Greece was just kind of a stepping stone. Like nobody was really too concerned about Greece. What the concern is could that debt problem in Greece kind of trickle into Spain and Italy specifically, and specifically Italy, because it is a very important economic system for the European Union. And they're projecting to go into more debt versus what the European Union has approved and the ECB has approved. And this goes back to austerity measures that was going on with years and years and years with Greece. So we're now starting to see it trickle kind of into that Italian debt crisis. And that's what kind of drove that market down, down overnight. And the market kind of gaps down on the open, not gaps down, but it kind of sells at the open here. But apparently within the first hour of the trading day today, we have cured the European debt crisis because intraday speaking, Tim, it did nothing but kind of just show strength coming off that movement here. You see that movement coming in overnight, but then once that market opens up, the European debt crisis is now over, and it's just boom, 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 and it's recovering. It's at the highs, and if you break those intraday highs, Tim, you should see some more appreciation coming into the close. So what I would suggest is keep an eye on that intraday high of today and see how the market responds coming into the close here. I think that is important.
We had a sharp sell-off Wednesday just before the close. We had a little bit of a sell-off, here in the last few minutes, but I think the close of the market will be very important, for day traders and for swing traders. But in net, Matt, I think we're going to close out the week probably pretty flat. If you kick that back into a weekly chart, I don't see a lot of action in the next.
No, it's literally Doji Fest.
Doji Fest here. Yeah. Oktoberfest, Doji Fest. That's maybe everybody's out there drinking beer already.
Play on words. Right? I like that. I like it.
We rarely do this, but bring up the euro dollar cross pair because I think that news out of Italy is probably the most important economically, in my opinion. What's going on in Europe, Matt, obviously has brought the euro down, and being the second largest currency in the world, it has propelled the dollar higher in the last few days. Has this changed your opinion? You were looking at a breakout here for the euro dollar. Has it changed your opinion on this?
Absolutely, it does. Cody, our producer Cody here, he was asking me that question in our pre-production show. He's like, well, Matt, given the fact that we're now seeing kind of a little bit of a retracement here, is that going to adjust your trigger on when to get in here? And I said, no. And the reason I said no is because you're now right back down into the pattern that you don't have a bullish uptrend here. You were going to have a bullish uptrend if we were going to break 118, and that's why my trigger was above 118. But because now you're back into that sideways behavior, the overall head and shoulders formation that we've been seeing for the past couple months, 2-3 months on the euro dollar, it doesn't change anything for me. It's still a wait and see approach. And this is one of the most frustrating things as a trader is you get so anxious to do something that you're like, oh, now I can get it at the cheaper price. And it's sometimes like, well, getting it at the cheaper price isn't necessarily a good thing, right? Mm-hmm. And that's kind of how I'm seeing it here. I mean, I want to be surprised if the dollar bounces off resistance and the euro appreciates over the next few days coming into next week. But between now and then, you have a Friday bank close. You have no banks open on Saturday, and you have banks open up starting with the Australian banks open up on Sunday afternoon, Eastern Standard Time. So you have a good 48 hours, Tim, between Friday and Sunday. And in this European debt type crisis situation, I remember trading currency during the Greece situation. It's very volatile. So stay away from it. Let us set up better. Wait for that breakout or wait for a better setup.
Well, and I was going to mention Greece actually, because this thing going on in Italy does remind me that there is just political turmoil in Europe. 20 years ago, Matt, I was a freshman in college. That will date me there, guys. And I remember getting into a political science class, and there was this, I can't remember his name. I wish I could remember his name. He was an Iranian professor with a PhD in political science, and he was talking about the euro, because that was the day, literally, he came up in front of our class, and I had no context of this at the time. He said, guys, you guys don't know this, but the euro was just adopted as a formal currency. And at some point in your lifetime, it will no longer exist. That was his claim. And his argument was that there's too much political turmoil in Europe where they don't always agree with each other. And maybe it will eventually unwind. In the last 5 years, we've seen a Grexit issue. We've seen Greece almost go bankrupt. We saw the Brexit vote. We see problems in Spain and now also problems in Italy.
The nationality movements within the Eurozone is very similar to what's happening in America as well.
I have a hard time going bullish on the euro on technical signals in the long term for a lot of reasons.
Let me rephrase what I just said. Okay. Mm-hmm. The nationality movement within the US and the Eurozone is very similar. Okay. But it's not like, put it like this. California is not breaking up into 3 states and they're not seceding from the union. Italy can, Greece can, others can. I wrote an article, about 5 years ago now, Tim, where I basically made the argument that Greece should leave the Eurozone, default on their debt, kill the euro, go back to the DROC, back it next to some type of raw commodity, or even adopt Bitcoin. And basically I made that argument literally 4 or 5 years ago to do that. Mm-hmm. And so I still believe that, by the way. And this great, we call it the great experiment in the United States, and the great experiment is basically where all these people from all these countries and all these different lands can come here for the economic freedom and what we embrace as capitalists here in America. That's called the great experiment. But you also have something similar that's happening with that Eurozone, where you had, at the time, 17 nations come together, and ultimately 28 nations came together to form the Eurozone. But Tim, your political science professor 20 years ago, might have been a little bit of Nostradamus here, because if the European Union starts to break apart, there's no reason for the euro, and they'll go back to singular currencies. So, is there that macro risk in the euro? Maybe, but we're a long ways away from seeing anything like that.
Another reminder, though, that there is political infighting, and obviously
another reminder that fiat currency has risk.
It does, for sure. Yeah, the fiat currency.
Don't get me started on that today, Tim. I did about 8 hours of research on that last night, and so I'm all hair triggered over fiat currencies today.
All right. Well, we'll find a hair trigger on some put options here as well. I think there's a lot
Right,
of charts
Facebook.
setting up
Yeah.
as well. I got a few picks here later in the day here. By the way, welcome out halftime crew. And it's
Yep.
a
Good to see you guys.
happy Friday here. Good to see all of the regulars popping in here. Hashtag halftime crew. Let's go through the indexes, Matt. Let's look at them one at a time. Dow Jones Industrial. I like the relative strength here. We've been talking about the strength in industrials and also large caps for a while. It's a good looking pullback.
It is a good looking pullback, and it's setting up. I like the industrial component of this. I don't like the financial sector component of this. That's why if you look at kind of the industrial index, it had a little bit of a deeper pullback, cleaner setup on that industrial index. So if you're looking at the Dow, there's a lot of industrial, there's a lot of finance in there. And when you're looking at the Dow, the industrial component, I like this pullback a lot more. If you look at that financial sector here, XLF, I'm seeing some relative weakness here. I basically said I'm not buying this. Well, again, I'm kind of a skeptic on all things banks, but I never bought kind of this little breakout here, quick fade action coming back down in price. So when you're looking at a lot of the components that make up that Dow, the industrial components are still the better components of that. That's kind of what I'm looking at.
I agree, and I like a lot of the large cap components in there as well. And there is some mixed action in the sectors. There's no doubt financials are weak. I think the brokers are weak. There's a lot of opportunity as we're stock picking right here. And even the international markets.
Finance is being held up right now from credit card companies and insurance companies.
Mm-hmm. Yeah,
all the banks are bad right now.
Well, by the way, I do like one of the pullbacks in credit cards. I like AXP and Visa here. AXP especially. We'll take a look at it. Visa has been very bullish. Look at American Express on a pullback.
Express. That's a very clean setup.
Yeah.
Like that one.
All right, let's move on to the NASDAQ. Tech has had mixed action here, and it's been that way for a while. As I'm looking across all my different tech stocks, I know Facebook is one of my favorite plays today, Matt, for a bearish setup. There's no question in my mind that it's set up for a trigger, and I've already pulled the trigger on that one. CRM down 0.5%, Google down 0.5%, Facebook down 2% on weakness, showing even more weakness here intraday. Microsoft flat, Netflix is flat, down 0.5%. Baba's getting beat up a little bit here as well, finally turning over for us, down 1.5%. Apple flat and Amazon flat. This is the story with tech, and one of the reasons why I've had a hard time being as bullish as I would want to be on tech. I see so much mixed action when I break down the individual components. The NQ is beautiful chart. And I'm bullish on the NQ, but I'm going to keep it underneath the Dow because of what I'm seeing in the individual components. What's your read on tech here?
I got the same read, Tim. I mean, You nailed it there. I mean, there's a lot of mixed components in the Nasdaq right now. Like you said, Bob is starting to turn over, and that's something that we've been waiting for a few days now, and that's obviously a good signal for both of our directional plays there on Alibaba. But yeah, if it breaks out of that all-time high at 7,700 here, that I'd be more than willing to drive it back up that ranking system that you and I have. But I think you're looking at something that is just kind of fading into resistance and it's slowing down a little bit. And it's a Friday, and there's nothing really going on besides Elon getting kicked out of Tesla.
Do we have slowing momentum here? Ever so subtly. Look at the moving averages.
I mean, you do. I mean, are we talking about the overall strength of the trend?
Yeah.
You do have a little bit of slowing momentum. It's not a perfect chart in that, right? I still like that Dow chart a lot more. I like the S&P chart a lot more, but you do have a little bit of slowing momentum coming into this. And what kind of creates that slowing momentum is look at this fade action here. It's really not strong. It's not weak. It's just kind of fading here. And that means that short-term moving average, the 20-period moving average right here, is starting to kind of consolidate against the 50-day moving average. And that's a little bit of an indication of slowing momentum, although I would not get too caught up in that. When you're looking at, say, the S&P 500 here, you really don't have that yet. It's just an orderly pullback down into the 20-day moving average. When you're looking at when you're looking at YM, which is up 2 points on the day so far today, you got to love that 26,476 index and all the 30 components in it, and you're basically flatlining for the day. That's amazing. But you have a very clear setup here with expanding moving averages. So, there is some subtleties in the momentum behind the NASDAQ in comparison to the YM and the ES. but that's also why we, go through the ES and the YM first, is because right now we both have them ranked a little higher, and the momentum factor and, the response that we thought it was going to have when it got into the bull zone, 2 weeks ago, never played out. And so, yeah, it's slowing down.
Well, in all full disclosure, I mean, I might be talking my book here. I did take profits on Amazon, so I had some concern there. I hedged Apple, which I've had a long-term position on for a long time, with some covered calls, So,
Yeah.
and then I've got a few bearish positions on Baba on Facebook. So I know what I'm seeing in the charts that I watch, and I do see some slowing action and mixed action here. I still got a bullish call on tech, by the way. Let's not change that.
No, I have a bullish call on all three of the majors, S&P, YM, and NASDAQ. The difference between all of those is subtle. It's subtlety. It's not like, one of them is completely outperforming the other one right now. The only one I'm really concerned about is the one that showed a little bit of strength earlier today, is the Russell 2000. And this one to me is starting to get very concerning, Tim.
I agree. Actually, I'm moving it into a neutral category short term, and really corporate earnings are going to kick in. I think October is going to be a fascinating month. We'll leave the earnings conversation for next week. But guys, remember, earnings season for the market is coming up next month.
Oh, October, we love earnings season.
Historically has a lot more volatility to it.
Yeah, so much ammunition. I mean, obviously next month is a big month in the market with earnings, also with seasonality coming into the holiday season. And we usually get that good old Santa Claus rally come from mid-October to mid-December. So I'm sure for the halftime crew, we'll be analyzing all those opportunities for all of us, no doubt.
I like it. Let's move on to the commodities and currency market. Look at the dollar first, actually. The DXY head and shoulders developing. Who the heck knows what we're going to call this pattern? Maybe it's the quadruple shoulder and head pattern. I what do you even name that now?
I can draw you some lines.
Yeah.
I can give you a nice little line here. You do have your head and shoulders formation here, Tim. Left shoulder, head, right shoulder. Technically speaking, when the head and shoulders part, which is called the neckline. So when the head and shoulders part, which is called the neckline, when that is broken, that is now a bearish downtrend. So technically, this would be considered a bearish retracement back into the breakout channel, which would be a short-term, type of bearish signal. But with the European debt coming out today, even though the technical formation's okay on a short here, what if it, not today, obviously, you'd wait till Sunday's open or Monday to kind of do that as it comes back down under 95. But to me, that's such a hard trigger to pull right now, given the massive economic news that's coming out of Europe.
Well, I'm not looking to add too many positions here on a Friday. A lot of times on a Friday, Matt, I'm setting up for prep for next week, and I am willing to pull the trigger, by the way. It's just that I'm going to be a little bit more cautious going into the weekend. I tend not to add a lot of new swing trades on Fridays.
It is going to be a fascinating 2 hours at 2:00 today when we do our scatter report meeting. And, we're going through all these picks and analyzing all this. It's just going to be fascinating because this week, unlike last week, I feel like there's more room for debate here.
I agree.
In a lot of these markets, in the stock and the options markets, we'll definitely do our debating and finding and analyzing and come together. But I think there'll be a lot of debate on what's going on in crude, gold, the dollar, all those things for those scouting reports. I'm looking forward to that meeting.
And by the way, team out there, if you're a member at Tackle Trading, let us know if you love the scouting reports. Put something in the chat. I know that
I'll tell you, they're getting good, Tim.
Oh, they're amazing.
Ever since 2 months ago when we started doing that Friday meeting where all us coaches at Tackle get together and analyze the entire markets together, I mean, those reports are just some of the best out there. And, obviously I have a strong bias towards tackle trading and all things tackle trading, but yeah. I'm telling you right now, guys, I've been around this industry for 13 years in every single capacity, from product designer to business developer to speaker to educator to trader, you name it. I've done it all. And I'm telling you, those scouting reports are the best out there.
Well, it's one of the most important things that you can do as a trader is have a support team of veteran and professional traders to help you. You still got to pull the trigger with your own money management, with your design.
Think about it like this. Yeah. And this is why I have been told to raise prices at Tackle Trading by everybody that's ever came in to consult with Tackle Trading. We put out about per month, about 40 to 50 picks in the stock and the options market. Well, no, we put out about 70 to 80 picks in the stock and the options markets, more in the commodity and currency market. A couple trades hit, I've known people who've made one trade off one scouting report and paid for tackle trading for like 3 straight years. So yeah, it's a no brainer. Go out there, watch the reports, pick the ones you like. That's what I do.
Yeah, and by the way, I'm starting to arm wrestle people so that I can do the report pretty much whenever I want. I love doing
Oh
them.
yeah, I loved what Tim said today. Tim did the options report last week, guys, and I'm going to give my brother. I'm going to give my brother a little bit of mad props here. That options report from last week was absolutely amazing. It was so good, and it's almost like everyone was every one of those trades worked out. And Tim comes on and he's like, man, I should do the scouting. I should do the options report every week. And I said, Tim, are you offering here? I mean, he's like, no, I'm not.
I got to be able to take a weekend off. All right. Listen, I mean, my wife and I have a nice little weekend plan. I think we're going to go down to the Home Depot.
We're going to do a little Saturday Depot.
No, actually, I'm going to do one of the reports here this weekend as well. I love doing them.
Where's my boy, Blue?
Oh, Will Ferrell. Maybe it's a Will Ferrell weekend. I'm not sure.
What's that movie? Old School?
Old School. Yeah.
Old School. That's classic movie.
Yeah. Rally here in the dollar. Yeah. Obviously not a tradable signal here, but actually I'm looking for a short dollar long currency cross pairs for next week. I think there are some that we'll be setting up, I'm sure. Move on to crude oil. Let's take a look at the light sweet crude. And Matt, it's incredibly bullish the last little bit.
I just can't. I just can't.
Well, I mean, listen, there's a lesson here.
Extremely bullish.
Yes. Trade what you see, trade what you see. And obviously it's been bullish. It broke the 70 mark. We didn't trust some of the breakouts in there, but then strong candle, strong candle, strong candle. Now we're approaching the all-time high going into the weekend. In 6 minutes, there's also the oil rig counts, the Baker Hughes ones, which as a day trader, I care about. Not really as a swinger position trader. I'm not going to look at it too much.
They're not as bad in their rig counts as the other ones that put out on Wednesday. But, as a day trader, you're looking for a potential hair trigger there. Yeah, it's a report you can day trade.
Very bullish in crude oil, obviously bringing a lot of the stocks in the energy sector higher as well. We're going to have to reevaluate some of, obviously what's going on in energy and materials as well. Take a look at gold, Matt. I actually am very fascinated with this chart. I got to tell you, that breakdown.
You don't think it's absolutely 100% fundamentally and economically consistent on a day where the market is dodging for gold, oil, and the dollar all the rally? You don't think that's consistent here?
I will say this. I took my put trades down on gold, which I have had a core position on for months.
Yeah.
So whatever that means, right, wrong, or indifferent, I've been bearish on gold for a long time. That smacked 1190, and I said there's no reason to be in anymore. Okay. And I have been unwinding it now for a couple of weeks, by the way, and I'm not in anything right here, but I am very neutral on gold right now, and I would love to see this thing do something. And I don't really care what, by the way. It could take another leg lower. I'm going to be open-minded. If gold wants to go down, it'll go down. I have to trade what happens. It's not my job to tell the market what to do, but it would be very fascinating to see a breakout on gold at 1220, and I think that would be a really good signal for anybody wanting to get long the metals market. By the way, silver is better than gold today. Silver is killing it. Yeah, take a look at the silver chart.
Good old silver.
Much better chart. Actually, reversal signals in here, and you had a little bit of a breakout. Now, $15 on resistance.
I want to give you a little bit of just a historical connotation to silver.
Mm-hmm.
Did you know silver was the preferred metal from 1792 until 1834?
Where?
In the U.S.
I believe that.
Okay, and then in 1834. The United States Congress purposely adjusted the ratio of gold and silver from 15 to 1 to 16 to 1, making gold more expensive in comparison to silver. That made silver cheap, which means we exported all of our silver out of the United States from 1834 until 1861. We basically had no silver, and that's how we adopted the gold standard.
I did not know that. No.
1861
lesson. I like
hashtag Fun Fact Friday.
Fun Fact Friday. There we go.
Well, the thing about it is we've been using silver in coins internationally for a long time. I know that, when I was in Chicago a couple of weeks ago for my birthday, had a chance to go to the Art Institute, and they had all the old silver coins from around the globe. Historically, they have a coin display there. It was really, really cool. So I know silver's been a part of obviously metals and it's had value forever, Matt. Here we're looking at both. I mean, if you had to go long one right now, silver to me looks a little bit stronger on the current candle. Agree?
Oh yeah, absolutely. I mean, but you're not touching silver right now. That's still bearish.
No, I'm waiting for that thing to break above 15.
It's not going to break and run just without retracements and slowing down. That this is going to take weeks to set up on a long silver trade.
Well, if not even months to develop a core trend. And we're nowhere near having a consistent bullish uptrend. But I do, and I'm sniffing at them. I am looking at them. I do like some of the action in the metals markets here recently. There's no doubt about it.
And regarding Fun Fact Friday, when it comes to anything regarding currency or commodity, I can give you all sorts of historical content.
Give me the VIX real quick. We haven't looked at it all week. I want to look at it at least once. We have to have one halftime report day.
I thought I've just won. I thought I just won, and
you haven't won. This is going to be a battle fought at a future date. It's a sleeping dragon.
I'll do my standard. I'll sit here and stare at you in disgust.
It is a sleeping dragon waking up at some point in the future. I guarantee it. Move on to EEM, though. One of the things that I'm seeing in the market here today is some mixed action internationally, Matt. I have been bearish on the international markets like most of the market has for a long time. I'm interested in some put plays on some of those stocks like Baba and Baidu and JD and, Weibo. A lot of the Chinese stocks are showing me some weakness. What's your read on this chart?
I'm short EEM right now, so that should tell you what my read on this chart is. I went short 2 days ago on EEM. It's when I was calling you actually, and I said, hey, listen, I'm trying to make a decision if I should do FXI China or EEM, and you were like, just do EEM. It takes out some of the volatility of it. But no, I got to read. It is slowing its momentum on the downside, but at resistance with all the international geopolitical situations going on right now, I felt like it was a cheap way to make some money on the downside here with very little risk. So I'm bearish right now.
Give me tackletrading.com and go to the Trade Center. I want to use some of those tools over there for a few minutes. There's a lot of really amazing stuff over in the Trade Center, guys. I want to highlight one thing. Matt, click on the trade journals on the left. Just a real quick reminder to everybody out there. Guys, if you have not downloaded these trade journals and are using them.
Are these the latest updated ones too?
Yes, I just had an updated version go into the a couple of the different journals. So
yeah, very, very quickly, big shout out to Marius, who does so much good work on updating these journals for all of our team members over there at Tackle. So we just updated these, made a couple modifications and changes, improvements to some of the journals. So even if you already have the trade journals, make sure you download the updated versions as well. Obviously, the trade journal is where you kind of put in your trades that you're making. Your Theta Research Journal is where you research all your Theta-based systems. Your portfolio journal you should be filling out every single day at the end of the trading day.
For me as a mentor, I got to tell you, I was mentoring a student last night, and Coach Hector, actually, we got online and we were talking. And the very first thing I do every time I'm talking to a student is make them show me their journal. Because you have to keep records as a trader. There's no question about it. The journals are critical. Kick over to the Skyline, though, Matt. I just wanted to highlight those journals for a second, but then also talk a little bit on the Skyline. Roll down to the sectors, the XLIs and the XLBs and the XLVs and all those different ones. And let's peek through those one at a time and just kind of give us a quick rapid fire rundown of what you're seeing in the sectors and kind of a peek ahead of what we'll do in the scoreboard.
Love it. Okay. So I'm going to do this rapid fire style, guys, to where I'm just giving you a quick read from a technical projection kind of leading into next week. XLRE, and this will also be in the market scoreboard that we put out on tomorrow morning as well. So XLRE, the real estate sector here, you're looking at an overextended bearish downtrend coming into the 200-day moving average. I expect that to slow down and look for a little bit of price appreciation coming into that next week. I'm not necessarily suggesting that is a buying opportunity because that's more of a, reversal to the mean type situation where it'd be a bearish retracement in a short-term downtrend. But I do expect price appreciation coming out next week on real estate. Consumer discretionaries here, I have a neutral call on it. I've been neutral on it ever since the Feld breakout from way back here. I have disagreement with my tackle coaches on that one. I will say it'll be an interesting discussion today. I don't think there's a trade here unless you get a close above 118. But if you start seeing price appreciation above 118, Tim, look for stock picking in discretionaries, right? There's a lot of great discretionary stocks that are setting up right now that if that triggers above 118, that's going to be a really good opportunity. Technology, we've already kind of looked at here. You're just basically seeing the NASDAQ, so we've already analyzed that. Industrials, we've talked about quite a bit. It has not confirmed yet. Again, confirmation has to go above the previous highs. So even though it hasn't confirmed, I'm getting excited. Lots of opportunities are setting up in those, especially, Tim, in those industrial stocks that we were looking at yesterday. Those same stocks are even setting up better. They might just not trigger till Monday or Tuesday, maybe even Wednesday, but that's still a watch list to keep an eye on over the next few days. Basic materials just getting absolutely slaughtered here. Do not touch it. Move on. This is a sinking knife. It's a falling knife. Get away. Move on. Let the destruction happen and then come in and pick up the pieces after everybody's lost their money. Next is energy here. Looking at resistance inside expanded body candle ranges. That is a bullish engulfing candlestick pattern. However, you're overextended coming into the breakout. I've warned everybody against that more times than I can count. When you're overextended coming in potential breakouts, that is a sign that it's already ran too far. Be patient, let it come back down, and then take another stab at it. Right now, Tim, this is the consumer sector, consumer staple stocks. This is a big fat M type formation happening right now on the consumer staple stocks. The M, what does the M stand for, everybody? We know what the M stands for. The M stands for murder. This is right now, this is a neutral sector because it's in the M formation, but watch that support level of 53.5. That's a very important support level. Next is a sector that just doesn't ever stop, ever. That is one of the most consistent trends I have ever seen in the last 6 months. It's a turner, it's a churn, it's a burner, it's everything. This to me is overextended, but I don't care because it's that on fire. But because it's overextended, be careful with the stock picking in there. It is the number one sector according to my own rankings. So that's the number one sector, although I would not be surprised to see a little bit of a retracement next week because it is overextended. Utilities is forming what is known as a bearish retracement. Once again, it was a little quicker on the pattern here, but you see that big old M formation, very similar to what we're seeing on consumer staples. Once that M breaks, as you can see right here, price appreciation down very quickly. That's why you need to track 53.5 in the consumer staples sector. Look for this to do what's called a bearish retracement coming back into the breakout channel at 53 on the utility sector. That is a formation called the kiss of death. The first retracement after an M formation or a reversal is called the kiss of death or the kiss goodbye, hello kiss goodbye, but they all refer to the same thing, an extremely bearish situation. I never short utility stocks though, because I just don't. They're not big turners for me. They pay a dividend, but that is a sector I'm very concerned about right now. And then finally, financial, that is also concerning. So Tim, I want you to think about something. The market is sending out support, but 3 of the 10 sectors that are either showing neutrality or bearish or negative formations are all defensive sectors.
Okay.
What does that tell you?
Well, it tells me to hedge going into the weekend. Don't take a lot of new long setups and really just do prep. You know, the thing about markets is, guys, there's all kinds of money to be made when opportunities are clear. I still have probably 25 trades on that. So it's not like I'm going away from the market, but I'm going to keep a balanced approach because there is weakness in some of these areas. There's no question in my mind you've got risk.
No, but when when you got 10 sectors and basically half are aggressive, half are defensive, and 3 of the worst performing sectors are all defensive in nature. And then real estate is also one of those defensive that is bearish in nature. That's 4 out of the 10 components of the S&P 500 that is neutral to bearish in conditions, and most of them are in those safe haven type defensive sectors. It tells me that the market wants to buy.
I don't think so. I think the market's cautious. And I'll tell you
Well,
where
I'm
my
not saying today. I'm
right.
saying Monday and next week.
Look at staples and discretionaries again, because those have moved into neutral conditions in the short term. And I think the market's just showing hesitation. Doesn't mean that it does not buy, and it may buy. But when you see the M pattern on the staples, then discretionaries are slowing down. I had a very aggressive call on that last week, Matt,
Mhm.
and it is now showing me some slowing momentum in the
Oh,
chart.
believe me, that was one of our biggest discussion points in the meeting last week was on discretionaries, and everybody was like, "This is a bullish type setup," and I just didn't feel comfortable with it. I felt it was neutral in my mind because it
Mhm.
attempted multiple failed breakouts. So I'm a little concerned I'm concerned a little bit about the broad market just because we're starting to see a lot of these sectors decoupling from one another. But overall, I still believe the market is bullish, and I still believe it wants to buy off support.
Well, and by the way, when I say I'm going to go neutral and when I say I have concern, that means that just going to focus on cash flow. In option trading and in trading in general, you have delta, you have theta, you have vega, you have gamma, you have rho. And we're going to go into the deep dive here for a minute, Matt. I'm just going to do more theta, right?
Mhm.
When the market is moving into some concern where there's mixed signals and mixed information, I'll probably focus on covered calls, naked puts, the poor boys covered call, stuff like that.
Honestly, though, Tim, I'm not that concerned about it, to be
I
perfectly blunt with you, because even in these sectors that are down, look at real estate. It's sitting on the 200-day moving average. I think real estate is going to price appreciation coming into next week. Financials is overextended to the downside. Utilities is overextended to the downside, pumping back up. Consumer staples is sitting right here on the M formation support level. Most of the time, it comes back up in before it comes down. So looking at next week in the market overtly, I'm
sure.
not that concerned.
I will trade bullish in some situation, but everything you just mentioned were mean reversion conditions.
Well,
We're
on
not
the
talking about
defensive
breaking the
ones,
all-time high.
yeah.
We're talking about being too far sold off on some of these sectors that they will mean revert back up a little bit, which I'm fine with, which does lend me to believe, Matt, that maybe XLI, that pullback is strong enough, and I'm going to still be focused on that. I love that chart,
That's
right?
by far the best setup.
Yeah, yeah.
By far the best setup. Now,
Guys.
again, you got to get confirmation above these higher end candles, right?
Mhm.
But that is from a pure technical condition. That's the best technical setup in the market.
Guys, I want you to imagine something here. What Matt and I just did the last 5 minutes, where we went through every sector and then we had discussion. That's what we're going to be doing here in a couple hours with about 10 coaches from Tackle Trading. And could you imagine being a fly on the wall in a meeting like that, where veteran traders and coaches are debating and discussing and have difference of opinion about what they're seeing?
A little bit more choice language, I would say as well.
It is a PG-13 rating, and that's being kind.
Last week it was rated R last week.
I'm a gentleman. I don't ever cuss, but that's just me. I was. I'll leave it at that.
It was fun. It was fun. It was fun. It was entertaining.
So I've got some mixed signals in the sectors, and I think that we will have some discussion and even some differences, and we're going to have to come to a consensus as a team over there at Tackle Trading. That's where that market scoreboard is going to come in, our weekly newsletter, and a breakdown of all the different analysis points. There's a bunch of companies I want to take a look at. Probably the most important one that we have to talk about is Tesla. There's no question about it. We did mention this last night. Elon Musk, Matt, you nailed this story as it happened. He came out back in, what was it, August 7th, something like that,
Probably seventh or eighth.
where he tweeted that funding was secured at 420. And obviously, people blasted that and thought it was a joke about smoking marijuana and all that type of thing. Turns out to be that that was true. And he did kind of round up to 420 just to kind of make a joke to his girlfriend. And obviously, they did not have funding secured. The SEC has a very detailed account of what they believe he did that was fraudulent or deceptive information. And as the CEO of a public company, that's not kosher, Matt. That is not a good thing. They almost
Well,
came to an agreement where he would have to step down for 2 years, but he decided not to take that. What's your read on this, Matt? I know you've had it the whole time.
my read is the current CEO of Tesla will be the former CEO of Tesla. About 5 minutes after he sent out that tweet, I literally responded, said, "This is the biggest nonsense I've ever seen since Jamie Dimon did it to the gold markets in 2011 with raising margin requirements." Listen, whatever you think about Elon Musk, you cannot debate the fact that this was wrong. It was stock manipulation, and that is illegal. And that's what I said at the time, and that's what I'm going to say now. And to all the fanboys of Elon Musk, and yes, I was a fanboy as well, I'm out on that. I'm out. You cannot manipulate your stock price to hurt traders. The market is supposed to be a free, an unadulterated, marketplace. And I'm so sick and tired of people, the billionaires and the elite of the world, getting away with nonsense like this. It was wrong at the time. It's wrong today. And Elon Musk should be punished from the SEC. And Tim, my tweet to Elon was, enjoy the litigation that's going to happen, because you tried to manipulate your stock shares to hurt your short sellers. And there's fire, there's smoke, there's everything. The evidence is overwhelming. Elon should have taken the deal. He didn't. He's now going to be kicked out as CEO of Tesla, in my opinion. Okay, that is just solely in my opinion. The question is, though, is what happens to Tesla if that does go through, Tim? I mean, yeah, maybe there's a some opinion out there where people are like, well, Elon was kind of losing his mind a little bit lately, and they're going to bring in this stable CEO from some other company. And there might be that opinion going on there. But Tim, I just go back to from the time that Elon Musk took Tesla public a few years ago. Tim, this stock price is not justifiable at $300. The only reason this stock price was a $300 stock price is because the fanboys of Tesla and the fanboys of Elon Musk and the fanboys of SpaceX and the fanboys of rocket fuel and it's those individuals who love Elon Musk coming in and buying at 30 and 40 and 50 and 100 and 150 and 200. And if he's no longer the CEO of Tesla, are they still going to be able to go out there and be like, yeah, this is still a good opportunity? Also, look at the institutions, Tim. If you're an institution and you've been an investor in Tesla and you're sitting here and I'm dead serious, it's the last day of the quarter. And if you're sitting here and you're like, man, I can lock in whatever loss or whatever gain I have on Tesla right now as an institutional trader, take it off my books for the fourth quarter. If you're not doing that, I think you're making a big mistake here. I see tremendous risk to the downside here on Tesla. It's going to be an extremely volatile ride, though, an extremely volatile ride. I haven't decided exactly how I'm going to play it, but I will tell you, if this sucker ever closes that gap, I'm going to put my entire account on put options.
I was joking before the show that Elon Musk is kind of like Icarus. He flew too close to the sun. And I want a meme, Cody, with Icarus flying too close to the sun and saying funding obviously was not secured.
Funding not secured. Listen.
Pull it back to the weekly chart while you have this next round.
Hold on. I love Elon Musk's vision. I love his vision. I believe that he's going to Mars, okay? But you cannot lie to your investors. You cannot manipulate the share price if you're the CEO. And for the love of God, Elon, I'm going to say the same thing to you that I've said to Donald Trump many times on Twitter, and he never responds to me. Get off Twitter. It's not for you, okay? Elon, you're the public head of a massive $60 billion company. Get off Twitter. And I don't remember who said this on Twitter, but they said, Elon, be like every other CEO of every other company and only post inspirational quotes.
Bull. I don't like that. First of all, the reason I like Elon is not like every other CEO. I don't always need everybody polished and pure. Okay, I do like the raw nature of being able to tweet
him as CEO. Then
that may be true, and that may actually be what they need as a company for the short term. He's going to fight him, I'm sure. I am a fanboy still, by the way. I have no position on Tesla right now. I want you to kick back to a weekly chart, and I got a question for you from a fundamental perspective. If you lose Elon Musk as the CEO, does that stock break down or does it go up? If you had to take a guess, and it would be a guess, but what would you expect?
Down.
I think it would break down. I think if you think about the fundamentals, Matt, it's got a negative PE ratio. The only reason why people invest because they believe in the future and the vision of the company, right?
Oh, Elon Musk is one of the best salespersons of all time.
There's no doubt, especially in a boardroom, the way that he gathers financing and all those kind of things. It's been pretty incredible for a very long time. And he has been awesome at selling himself. Matt, that 250 zone if you think from a long-term perspective, Elon gets actually thrown out as CEO, because right now he has charges, right? From the SEC, which is not, by the way, some criminal charge. The SEC is putting litigation out there. Am I correct on that? He could.
Well,
that'd be a different,
though.
Right.
I mean, we don't put billionaires in jail for tweeting funding secured, but we put Martha Stewart in jail for that stuff, not Elon Musk. But in terms of this, though, Tim, yeah, he could be facing massive fines, and the most likely scenario, and I think the thing that really kind of stopped that deal is Elon basically going all, what's that guy from Billions? What's his name?
Paul Giamatti.
No,
I've never seen a single episode of the show, but
Paul Giamatti's great in it. But no, the other main character. Help me out, halftime crew. Who's the lead in Billions? What's Axelrod? Axelrod. He's going all Axelrod. Axelrod in the show is basically. Elon probably watches this show, and that's why he did what he did. Axelrod is being charged by the New York Attorney General of stock manipulation, right? And all of a sudden, he has a deal, signed a deal. And Tim, I'm not kidding. In the movie, in the TV show, Axelrod has to step away as head of this hedge fund for like a few years, and he rips up the deal in this dramatic. And I can see Elon Musk yesterday sitting in front of the SEC and being like, 420 this, and rips it up.
I have to ask you, you've kind of opened up can of worms here. There's a guy named Axelrod. Obviously. So first of all, is there any Axl Rose jokes in the dialogue?
No.
They don't. No. He doesn't just start breaking out, Hell's Bells and doing GNR songs.
It's a good show. It's a good show. I just say it does remind me of that, or Wolf of Wall Street. There's a lot of memes on the Wolf of Wall Street as well. But I hope there's a positive outcome here for the Tesla investors. But if you are an investor in Tesla and you're going to stick with it, you need to buy insurance.
I would 100% agree with that. Right now, if you do own shares of Tesla, and I know on the gap down, it's going to be very expensive to buy put options. You should have been holding put options for a long time.
You should have been holding put options.
And collaring and whatnot. I love Elon Musk's vision. Obviously, I have concerns about his direction, not just with this funding secure stuff, Matt. It goes back to the April quarterly earnings report conference call when he lost his mind. I mean, he literally lost his mind at a bunch of the analysts. It's been a year in the making here. There's been a lot of problems going on.
Well, that's the thing. That's why there's so much evidence, is because he's the head of a public company who has had a public battle for a year now with the short sellers on Wall Street. And in that April conference call that you mentioned, Tim, he's literally started yelling at them. And then in the August conference call, he apologized for that and then started yelling at them on Twitter. Listen, and this is a good Bobby Axelrod. Thank you for that, Joquez. This is a good reminder for anybody, the young children, the old individuals, whoever it is, okay? Before you send the tweet, just take a deep breath. Before you send the email that you want to say something nasty, just walk away. Just walk away. Give yourself some time to think about what you're going to say, because when you send a tweet, Tim, you might be able to delete it. That doesn't mean everybody else did.
Here's where my brain is. I don't care where Tesla goes. I'm going to keep watching it. It's on our Tackle 25 because of fundamentally sound reasons that we started the year with, which was just completely vision and expectations in the future. I can't imagine it's going to be on there again next year, Matt. This one's probably going to get pulled off.
Once he sent that tweet, it was getting off.
And
manipulate our list. So
if you think about Ford Motors and GM and all the different automakers, and Tesla is an automaker, let's not turn them into some just tech company. They do make cars. They got to sell cars. They've all been bearish too. The auto sector has been really under pressure. Tesla's held up relatively well. That break at 250 would be a nasty signal and a tradable bearish signal, in my opinion. Let's move on to our last sector and area that I want to talk about here today, Matt. And that's beer stocks. Tomorrow, I'm going to be going up on top of a mountain and drinking beer with my wife and my brother. And I'll tell you, it's Oktoberfest. That's right. And, it made me think about the beer companies and whatnot. They've not all been good. I know that you found a bunch of different beer companies, and I
Well,
want to.
I just found some just wineries or beer companies is what I look like.
Okay.
I know you like your microbrews, and I know you. Yeah, this you might not know that this about Tim, guys, but he went through a phase where he was brewing his own beer one, right? There's about 4, 5, 6 years ago. You even did some mock-up of a podcast you were going to do about home brewing.
Yeah, yeah. Keep your keg wet. Yeah.
Keep your keg wet. Yeah.
Yeah.
that is a great name for a website. Keepyourkegwet.com. So many different ways. But okay. So anyway, you were going to do a podcast on it, brewing his own brew. It was fantastic. So Oktoberfest is upon us in October. Tim, you're going up to Park City to celebrate little Oktoberfest, right?
One of the ski resorts. I'm not the one planning it. I got invited by my wife. She told me that her and her brother.
Is that how that works? That your wife invites you? Because I
did. She said, "Sweetheart, would you like to go to Oktoberfest?" And I said, "You bet I would." And we're going to do that. Yeah.
So okay. So basically, we decided that something fun we could do today is just kind of take a look at some of the beer and some of the liquor distillery companies to see if there's any opportunity for Tim to pay his bill. Because Tim, you're going to have a bill, right? Okay. So you're going to take her out to a nice little dinner, right?
Sure.
You're going to stay up there, right?
Well, we're going to go during the day. I mean, okay, Oktoberfest, sunshine, middle of the day. We don't want to be there crazy. We're old, Matt.
Okay, so a couple $100, $200-$300, right?
Yep.
So what my job is today is to find Tim a trade in this specific sector so he could make some money to pay to take his wife out to go to October.
My beer bill. I like it.
We're trying to pay your beer bill, right? Yeah. This is James. That's exactly what this is. It is personal infrastructure. Personal infrastructure is a big part of environmental hedging, personal gold. That's what it is. It's personal infrastructure. Basically, personal infrastructure for us guys means we just, to pay for anything in our life, we make trades in those environments, right? And cash flow and whatnot. So that's good call, James. All right, so here's one. This is Diego. Diego is a liquor company, Tim. Bearish downtrend, okay, showing weakness, retracement back up into the 200-day moving average. I like that as a potential bearish trade for you, Tim. Now you gotta make this trade, bro. You gotta trust me on this, okay? Because I'm gonna do you a solid here. Looking at a very similar type situation on Constellation Brands, but coming very close to earnings here, so that's a stay away from me, Tim. I know you're not a big Budweiser guy, are you?
I like Budweiser just fine.
Like Bud. You like Bud. But
breakdown.
Go-to beer. When you're at a restaurant, what's your go-to beer?
Oh, I'll usually order something local. Like, especially when I travel, and I'll ask, what do you have local on tap? Beer is much better on tap, in my opinion.
Okay. Yeah. Well, here's Budweiser. Budweiser is literally breaking support as we speak right now, showing relative weakness, down 1% on the day. I like Budweiser on a short breakdown trade. ABAV. This is ABAV. I don't like this one. This one's slowing momentum, short-term consolidation.
$4 stock too. That'd be a hard trade.
That's out here. Tap. This is Molson Coors. Tim, do you drink Coors? When's the last time you drank a Coors?
A Coors Light, the Silver Bullet.
When was the last time?
It's been
okay. So we're out on that one too. Yeah. And then you probably done a little bit of a Boston Beer Company here.
Sam Adams Good Beer Company.
Little bit of an M formation cup and handle. Don't know about it. So this really kind of brings me down to. And guys, I'm going to need the halftime crew's help on this one. So let's go tiebreaker this. Cody, get this on a Twitter poll. Not ask the question. Actually do a poll, Cody. And is Tim going to short Diego or is Tim going to short Bud? Let's throw it out to the.
I like that Sam chart, Matt. I want Sam in there because I do like that sell off on Sam today.
We're going to talk about your technical skill set here in a little bit. We're not looking at Sam. Okay, so Diego or Bud? We got two. Diego or Bud? Everybody's got to vote. Diego or Bud? Are we doing DEO on the short or are we doing Bud on the short? Once again, Diego retracement back into the 200-day moving average. Bud on a breakdown showing weakness. What do you think, Tim?
I haven't been drinking yet. I'm not going to trade based on you guys' recommendation. I make my own.
You have to. We are doing this. We are doing. I need more. I need more, everybody.
I'll tell you this.
Bud, I'm prepping a trade. Hold on, you can't talk. I'm prepping a trade. You're messing with my mojo here. I'm trying to think about targets and entries and stop losses and risk rolls and position size and what strategy that I'm going to select for your trip here. Let's see. That's right, James. Okay, Bud, Diego, Bud. Exactly, Frank. We're going Budweiser here. Now, Tim, on Budweiser. Okay, now I'm going to prep this trade for you very quickly. Okay,
well, bro? I'll tell you, I'll give you the answer, by the way. Budweiser is the answer. And for a lot of reasons. Number one, I've traded it many, many, many times. And so it's on my watch list. And we actually had it, Matt, talking about the reports. We had Budweiser on the option report.
So we're going to go make some more money on Bud here, Tim. Now, Tim, okay, this one's already confirming. All right. It's already confirming. I'm buying put options here. Now, Tim, I want a stop loss above the breakout channel. The breakout channel is 87.5. The ATR is 125. We'll call it 120. Just make my math easy. Tim, your stop loss is at 88.10. Okay. 1/2 ATR above the breakout channel. So stop loss 88.10. Entry is on confirmation. You're already going to do it. And target here, I'm going to do a quick study here on potential average yield. Tim, I'm looking at my average drops here in the motive waves to the downside. Looking at 106 down to 96, about a $10 movement. Did have earnings there. Looking at 101 down to, we'll call it 88, 101 to 88, $13 movement there. Your target is $11.50 off the 92 pivot up here. 92 minus the 11.5 equals $80.50. Tim, your target's $80.50 right there. Now, Tim, let's go see how much beer you're going to drink over the next week for Oktoberfest, okay? So I'm going to go out to 84 days. I'm going to get you enough time here, Tim. I'm going to get you enough time. I'm just going to buy one option, Tim. Okay. I'm not going to do your overall position sizing and all that. I'm just going to, because you just need some money to buy beer, right? That's all we're talking about.
Beer money. All right. Yeah, sure.
That's all we need. We just need some beer money here. Okay. So here we're going to go out 84 days. I'm going to right click just because I want to frustrate you because I'm forcing you to do this. I'm going to buy one contract, okay? One contract. I put my stop losses in and all that. Now, Tim, I want to look at this here, okay?
So, yeah, you already had I'm
trying. It's
bear put spread on there.
Yeah, I know. I'm trying to remove it from the equation.
You may need to just click on those long options. The 7 are fine. Well, actually, you may need to simulate 1 now.
Yeah.
All your right clicking has messed you up. It's bad karma. You should start learning to left click in the option chain is all I'm going to say. There's your Budweiser trade. Yep. And go back to analyze an account statement click on analyze up here.
Hold on.
Back to the risk graph.
Hold on. Nope. I'm going here.
All right.
All right. I just got to see how much money you're going to make, bro.
All right.
So we're going to put something else on here. So we're going to go buy a put option.
Well, there you go.
Okay. So, Tim, you're going to make $500. How's that sound?
I like $500.
You can buy a lot of beer with $500. Right? You can have some fun on $500. And that's how traders do it, ladies and gentlemen.
But here's the problem.
Stress of Tim thinking that he had to drink $500 worth of beer.
Hold on. If you did like that, give us a like and share. That was good. Come on. We got Tim some beer money. Let's go.
So here's a question. And no offense, I don't mind Budweiser beer. Let me make sure I'm clear on this. But if I make $500 on Budweiser, can I buy good beer instead of Budweiser? Is that okay? Can I roll it into an actually a good micro brood
that
local
is the personal gold system right there in play? You cash flow in the paper asset to go compound in something else that's better. I love it, Tim. I love it.
All right, guys. A little fun here at the end of the halftime report. Halftime crew, thanks for being here. Obviously, Oktoberfest over the weekend, man. I will make a trade on Bud, of course. Actually, I've had that on my watch list for a long time. I will tell you, I did not mind that Sam chart. I saw it and I was peeking at it. But Bud is also an international weakness play. If you think about it, we have Budweiser as part of some of the ETFs that are internationally based. So when you see weakness and selling in Europe and all that kind of stuff, that stock also takes a little bit of some of the selling from there.
I like to call them, Bud.
Yeah,
I like it.
All right. Any last thoughts from you, Matt?
It's 11:32. I now have the next 2 hours to prepare for the scouting report meeting, and then we're going to put that scouting report meeting on, and then I'm going to go do some more research into writing the personal gold book. So we're getting excited for that.
I like it. And by the way, if you're a pro member out there at Tackle Trading, we have the replay from our cash flow club last night. Tyler Craig had a very important concept on equity curves. Cody, if you can find the link for that replay and pop it in the chat, that'd be great. Outside of that as well, our scouting reports are published on the weekend. If you're watching this and you're not a pro, go and sign up. Pretty simple, tackletrading.com. You'll find a bunch of different ways that you can get set up there. Matt, good job. Cody, good job.
Yep. Good job, guys. Halftime crew, great job by you as well. Love what you guys are doing, and have an absolutely great weekend. Make sure you're checking out the scouting reports and preparing for the week so that you're getting your list ready. You're getting your plan ready to execute in the market for next week. We'll be back with you guys on Monday to help you do your daily routine and have some more fun. Thanks,
Cheers,
guys.
everybody. See ya.